This is your Wall Street wake-up call. U.S. stocks holding steady after a tumultuous coup attempt in Turkey over the weekend. I'm joined now by Michael Ingram, a market analyst with BGC Partners in London. So, Michael, it seems like nothing can stop these record high levels in the Dow and the S&P 500, not even a coup attempt in Turkey.
Yeah, I mean, I think U.S. very much viewed as a safe haven, despite all the, in face of all the turmoil in continental Europe at the moment. If you look at European trading at the moment, you've got volumes 45% down, and markets just feeling very, very listless. Specifically on Turkey, I was talking to a trader friend earlier who said that he thought this as a buying opportunity, but you'd have to say, looking at Turkish markets today, markets looking very, very cautious indeed. You've seen the currency has remained under pressure, bond markets have sold off, and the stock market is down on relatively heavy volumes. So I think right now, investors choosing just to step away from that situation, and I think that they're perhaps quite concerned by the purge that seems to be ongoing, particularly among the judiciary. As we know, President Erdogan has been agitating for more power for years now, and this is his chance. Let's see where investors are left at the end of that process.
Right, and we're seeing the Turkish lira up about 2% against the dollar, so in line with that story you were talking about. Now let's shift and talk about the banking sector in the U.S., because that's going to be the focus of this week. We had Bank of America beat Wall Street's forecast on the top and bottom lines this morning, but the major banks are really struggling from low interest rates, right?
Yeah, absolutely. I mean, I make the BOE numbers about a 12% beat. As you mentioned, JP Morgan surprised on the upside, as did Citibank last week, but that's against some pretty poor expectations. Bank of America, perhaps the most sensitive to low interest rates. And of course, we came into this year with the Fed saying we're probably going to raise rates 4 times. Now it's down to 2, and the market thinks it's not even going to be 1. So yes, the revenue line on all these banks going to remain under intense pressure, which of course forces them to look at the cost line yet again. And as Brian Moynihan reiterated today, that's going to come under increasing scrutiny. So if you're there with a desk, watch your back, because the axe might come looking for you.
Yeah, that's a theme we've been seeing for quite some time. So how do you play the markets right now? I mean, do we continue to reach record highs by a few points here and there in these indices?
Yeah, I mean, I remain relatively bullish on the US. I think we've got some very profound questions in Europe, not least geopolitical. Elements have come into focus over recent days, given the events in Nice and also in Turkey. And of course, we've got the ongoing pantomime that is post-Brexit Britain. Yeah, I'd be staying in the US, but of course, the valuation is a critical issue. So I think we've got to see how these numbers roll out during earnings season to make us feel comfortable that there's still some value in positions that we're holding in those markets.
Yeah, well, it certainly will be a very telling earnings season, that's for sure. All right, Michael Ingram from BGC Partners in London. Michael, always great to see you. Thank you.
My pleasure.
I'm Scott Gamm, and you're watching The Street.